All right, everyone, welcome to another episode of the ReVenture YouTube cast. And today we have some brand spanking new information on the U.S. housing market. Certain cities, certain markets around the country, according to new data from Zillow from their October 2021 home price register, are showing a massive slowing in certain parts of the U.S. housing market. We're talking prices that were going up at a rate of 3, 4, 5% per month are now trending flat. And this is going to have a big impact on the future direction of the housing market, because right now the air is getting taken out of the balloon in certain markets in America, which I'm going to show you in today's video. These are places where there was a lot of buyer FOMO. Let's just say 4 months ago, 5 months ago, buyers were tripping over themselves to get into these markets and to buy today, whether it be in a place like Los Angeles or San Francisco or Boise or Salt Lake City, Utah. Now there is no such pressure. Home prices in these markets are flatlining. They're not really going up anymore. And that means that you as a buyer in a lot of these markets now have time on your side. You can say to yourself, all right, maybe I can wait because prices are no longer going up. Meanwhile, there's certain other parts of America where home prices are continuing to shoot through the roof, both year over year and month over month. And what I'm going to do in this video is kind of show you the differences between these markets so you can make a more informed decision today in December of 2021 about whether it's a good time for you to buy right now. Maybe it's a good time for you to wait. If you're a seller, you're probably trying to time your decision. And if you're trying to do those things, the direction of the housing market, how prices are changing, how the momentum of prices are changing is going to be really important. So to get things started, let's take a look at a map. And this is a map of the 500 largest metro areas in America, and we're looking at the year-over-year percentage change in home prices. So how much prices went up from October 2020 to October 2021. This is data from Zillow, year-over-year percentage change. And the more red a market looks here, you can see a lot of places in Arizona, Utah, Idaho, the more prices have gone up. So we can see in Boise, Idaho, a 42% increase in prices over the last 12 months. Absolutely absurd. The typical price went from $353 to $503, $503,000, 42% increase in 1 year in Boise. Spokane, 29% increase. Riverside, California, 28% increase. And basically the entire western half of the US is where we're really in this biggest housing bubble where prices have just gone absurd. Meanwhile, markets that are more blue in color have had lower price growth. Not necessarily negative price growth. Most markets in America have gone up in price over the last year, but blue is lower. So if we take a look at some of these places in Louisiana, we only see 4, 5, 8% appreciation. We head closer to the Midwest and Illinois, we see lower levels of appreciation. And then if we look towards the Southeast, we also see really high growth, particularly in Florida, Southwest Florida, we're 30% year over year, up to North Carolina, Charlotte, Raleigh, we're plus 25%, all the way to Nashville, we're plus 23%. But what I'm showing you right now is year-over-year percentage change in home prices, and that's, the most commonly referred to statistic, is how much are prices today compared to a year ago. And this is a great statistic for understanding how a housing market is trending over the long run. But the problem is year-over-year does not necessarily show you the real-time data that's most important. Let me give you a sense of what I'm talking about here. We're going to take a look at Los Angeles to prove the point. So this is the Los Angeles metro area housing market showing year-over-year percentage change in home prices over the last 5 years. And we can see that we had back in 2017, 2018, 6 to 7% growth in home prices year over year. Then actually prior to COVID, LA dipped quite a bit. The housing market was flat, but then since then, we're up to around 18 to 19% year-over-year price growth in Los Angeles. So someone looking at this graph might say, wow, LA's housing market is in its peak boom stage right now. Prices are up 18, 19% year-over-year. Maybe I better buy now. However, everyone, let's layer in month over month. The month over month percentage change in home prices across the Los Angeles metro tells quite a different story, the yellow line. We can see that month over month change in home prices is now down to 0.6%, which is still a healthy increase in home prices. If you were to annualize that, it would be 7% over the course of the year. But what's very evident is the massive deceleration in LA's housing market over the last 3 months. And so if you were to talk to a local realtor investor in LA, I bet they're not sharing this data with you. They want you to focus on the 20% year-over-year gain. They don't want you to focus on the fact that month over month there's been a massive deceleration in price growth. And I suspect that this deceleration is going to continue to the point where we actually start crossing into negative territory, which we can see LA did back in early to mid 2020 or 2018. Another example where this is the case is, let's just see, this says Boise, Idaho. Let me change it real quick because this is not Boise. All right. Boise, Idaho, year over year. We're seeing 42% home price growth in Boise, which is absolutely crazy. I mean, that's the highest in America outside of Austin. That's basically one of the best years a housing market's ever had in US history. So you're seeing this in Boise and you're saying, oh my goodness, prices are up 40%. I better buy now in Boise before it's too late, right? Well, wait a minute. We look at the month over month percentage change, the yellow line. Very different story. It's telling a very different story. Month over month price growth in Boise is down to 0.4%. We can see it was at 3 to 4% month over month back in early to mid 2021. Now we're down to 0.4%, which is indicating a massive slowing in the housing market that hasn't quite shown up in the year over year figures yet, since we're still referencing 2020 in year over year. The beauty of months over month is we're referencing just the previous month in September. And so what I would encourage many of you to do, and what I'm going to do in this video, is take a look at these differences between year over year and month over month growth. Because what you're going to want to look at, if you want a real-time indicator as to where your housing market's trending, you're going to want that yellow line. You're going to want the month over month growth, because it's going to really tell you in the next 3 to 6 months what to expect, while as year over year is going to lag behind. Now, here's the interesting thing. We just looked at 2 markets, LA and Boise, where there's a massive deceleration. There's a massive slowing and appreciation, and that's great for you as a home buyer because it gives you more flexibility, more time. You don't feel like you need to buy anymore in these markets because home prices aren't going up that much anymore. Meanwhile, you're a seller in these markets and you're saying to yourself, oh geez, maybe I better list, maybe I better sell today. But not all markets in America are like this, everyone. Not all markets are like this. If we take a look at Miami, everyone, which I'm gonna have to just switch to real quick, Miami, Florida, we can see it's a different story. So if we're in Miami, we're up to 19% year-over-year price growth in Miami. And if we switch to monthly, we can see monthly we're still raging. We're still over 2% growth per month in the Miami, Florida metro area, which includes Fort Lauderdale and West Palm Beach as well. So Miami is a market that's still very much in its boom. Prices month over month are still really appreciating at a fast rate, and there's a lot of urgency for buyers in Miami right now. You know, the longer you wait in Miami, the more prices are going to go up. Meanwhile, sellers are saying to themselves, okay, I have a lot of time on my hands. If we're still appreciating at 2% month over month, you know, it's going to be a little while before we actually see a crash play out. Whereas if, again, we're in LA, that crash is much closer to occurring in LA. And if we just head back to the value map here, this was the value map year over year, highest growth. Let me show you what this value map now looks like month over month. Take a look at that, the massive change in coloring. Whereas year over year, we're saying to ourselves, wow, the western half of America is booming. Now we're saying month over month, the western half of America is slowing. Month over month, it's slowing. Some other areas that are also slowing, if you might notice in the Northeast, Maine, New England, New Hampshire, Massachusetts, we were red year over year, but now month over month, we're blue, which is indicating a slowing in the housing markets. Anywhere in blue on this map is no longer in this ferocious bubble, right? We have, you know, where prices are going up 2 or 3% a month. Now these areas in blue have slowed significantly. Of course, we can see the Southeast is still in red. The Southeast, as I've said many times, is still peak bubble. Things are raging in places like Florida and Georgia and North Carolina and Tennessee. We have big year-over-year and month-over-month increases in the Southeast, which is going to make it hard for you. Hard for you as a home buyer, easy for you as a seller. In these areas in blue, though, Boise, Idaho, San Francisco, Stockton, LA, these areas in blue is getting much better for you as a home buyer, and I think it will continue to get better into the future. Now, what I want to do is take a look at some requests from you guys. Which markets do you want to see me cover here? So let's take a look. I'm seeing Austin, Texas as a request. So let's pull up Austin, Texas on this screen and see how Austin, Texas is doing. Home prices year over year, month over month. So we can see Austin up to 44% year over year in Austin's housing market. The typical home price has gone from $365,000 all the way up to $530,000 in Austin. Huge bubble, potentially the biggest in America. We've never really seen a housing market appreciate by 40% and hold its value, I think, ever in US history. So Austin's going to have a housing crash. When might that crash occur? Well, if we switch to month over month, the yellow line, we can see there's already a massive deceleration of home prices in the Austin metro area, all the way from being plus 5% month over month in the spring and summer down to plus 1.3% month over month in October, which is still, good growth, but is massively decelerating. It's going to continue to decelerate. So again, what I want you to think about, everyone, is that this just basically takes the wind out of the sails of the housing market. If prices just grow slower and slower to the point where they're not growing anymore, a buyer no longer has any pressure to jump into the market. Because you as a buyer, you can say to yourself, I'm going to wait. If prices are flatlining, I'm going to wait and see what happens. Meanwhile, a seller is going to get more desperate. So let's take a look at a couple other requests. What do we got here, everyone? We got Atlanta. Let's take a look at Atlanta. So month over month, we can see Atlanta is looking a lot like Miami, where the month over month price growth is, this is Athens, Georgia, actually. My apologies. Atlanta, Georgia. Month over month, the home price growth is up by 2.3%. And you can see it's still very high month over month, as is year over year. That means Atlanta is still accelerating, still very much a seller's market. Buyers are desperate to participate in Atlanta right now. Prices are still going up by a lot. So, if you are trying to buy in Atlanta right now, something to think about. It's a seller's market. I think Atlanta and many other markets in the Southeast are probably going to shift to start looking like LA does and like Boise does in a couple months. So something to consider. Now we have a request flowing through for Phoenix, Arizona. All right. So Phoenix is a market that's somewhat in between. Year over year price growth is up 32%. Absolutely crazy. 33% year over year. Not many housing markets have ever done that. But we can see that the worst times are over. Month over month is down to 1.9% in Phoenix, which is indicating a slowing, decelerating housing market. Even though prices are still going up by a lot, they're not going up by as much as they were 3 to 4 months ago. We're out of the woods on the peak craziness in a place like Phoenix. We have a request for Denver. Let's take a look at Denver, Colorado. We can see a pretty big slowing in the market in Denver right now. Prices just shot all the way up June, July, up 2.5% month over month, and then wham, massive deceleration through October, up 1% month over month. Again, still good growth, but we can tell that the best days of Denver's housing market have passed. This will continue to slow over the next couple months, which will start to bring the year over year data down. Now we have a request for Chicago. Let's look at Chicago. I'm going to try to do like 25 housing markets. We've already covered about 5 or 6. So keep the requests coming in, everyone. Chicago, very similar situation to Denver. We can see the peak price growth in Chicago wasn't as high in July and August. It peaked around 1.5% per month, 14% year over year. And now the month over month growth has dropped quite a bit. We're at 0.9% increase in October, which is going to start bringing down this year over year percentage change line. And just to reiterate, folks, why this month over month is important, because it really gives you what's happening now in the housing market. What is happening today? What's the momentum of the market going? Pay attention to that month over month. Pay attention to the change in that yellow line. And you're going to really get a sense for how your housing market's moving. In the case like Miami and Atlanta, that yellow line is going up, up, and up still. We still have a lot of time in those markets before a crash occurs, right? We're not going to go from plus 3% in 1 month to minus 3% in 1 month. It's going to take time to get there. But in that Boise, Idaho, in that Chicago, in that LA, in that San Francisco, in some of the other markets we're going to take a look at in a second, which you're seeing slowing, we are much closer to an actual crash in those markets of prices going negative, actually going negative in certain markets. And that's why this month over month data is so important. You don't see it really reported much in the mainstream news because it's not as intuitive an indicator. Like a lot of people don't know what 1% month over month means or 2%, but when you see it in graphical form, it really clues you into what's going on in the US housing market. So let's take some more requests here. We got a request for Nashville, so let's do Nashville, Tennessee. All right, Nashville, much like a lot of these other Southeast markets, is still peak. We're still seeing month over month growth of over 2%, annual growth of up to 23% year over year, which has really never ever been experienced in Nashville's housing market. I think a market like Nashville, when you see the month over month growth still above 2%, it means you have time. If you're a flipper, you still probably have some time. If you're an investor who's waiting to sell, you still probably have some time. The market's still very buoyant, inventory is still very low. If you're a buyer, good luck competing in this type of market where monthly price growth is over 2%. Let's take a look at Milwaukee. We had a request for Milwaukee. All right, everyone. Now this is what we're talking about. Milwaukee, we can see we're almost in the negatives. Prices in October only went up 0.1% from where they were in the prior month. So you can see basically flat. $251,000 is the typical price in Milwaukee this month and last month. That means that the housing market has slowed tremendously. And while we're still seeing 15% increase year over year, check out this 1% increase month over month. I think this is actually one of the worst performing housing markets in America right now, Milwaukee. I don't think Milwaukee is going to have a big crash. I don't think there's going to be a big crash in a lot of Midwest markets where prices haven't gone up as much to begin with, but clearly a market like this is closer to price declines than some others. We also had a request for Augusta, Georgia. Let's take a look at Augusta. Much the same, and I think you guys are going to continue to find this. If you shout out a Southeast market, it's going to be tough. We're going to see this yellow line and this blue line continue to go up. Southeast is super tight right now. Lots of investors piling in. I've talked about this in previous videos. Atlanta, Augusta, Charlotte, Raleigh, investors are piling into these markets, pushing prices up in the short term, making it a very difficult place to buy if you're someone who just wants to live in your home, right? If you're a first-time home buyer, especially in the Southeast right now, it's very hard, very difficult. I would recommend probably most of you wait because right now you're competing with investors. If you're going to buy a home in Georgia, Tennessee, North Carolina, Florida, very likely, 1 out of 3 homes, 1 out of 4 homes in those markets are being purchased by an investor, whether it be mom and pop, whether it be big institution. And that's just a tough situation to be in. And I believe many of these investors who are pushing up prices today will be exiting the market over the next 6 to 12 months as the housing market continues to turn, as interest rates will go up, as inflationary pressures increase. Many of these investors are going to say, see ya, especially because a lot of them are buying at super low yields right now. Let's get a couple more requests in. What do we got here? Minneapolis. Let's take a look at Minneapolis. I like going to the Midwest. Some people say I don't talk about the Midwest enough, but we're going to try to remedy that right now. And now we're looking at the Minneapolis housing market. And you can see it's kind of similar to Milwaukee, where we've just had a massive downward trend in month over month price growth, still 0.5% month over month, which would annualize to 6% year over year. But, this is getting to the point now where a couple more months in Minneapolis, we could be in negative territory, which it hasn't seen in the last 5 years. Minneapolis hasn't seen negative price growth territory monthly, but we're getting to the point now where we're getting close to that. And I wouldn't be surprised if in the next couple months, in a place like Minneapolis, Milwaukee, we're going to see negatives at a certain juncture. All right, I'm getting some requests for Seattle. So let's take a look at Seattle. This is one that it's kind of a funny housing market. We can see that it's definitely moderated in Seattle. We're around 21% year over year. Now we're down to 1% month over month. So this is a market that's still very buoyant. Lots of people are still buying in Seattle. Prices are still going up quite a bit. But again, we're out of this, like, think of June 2018 when prices went up by 3% in 1 month. That's like the crazy period. That was the crazy period. June, that was like the crazy month in the US housing market where inventory just hit an all-time low. In the middle of the summer, prices were going up really fast. We're out of that window now in a place like Seattle. Let's take a look at Portland, nearby Portland, Oregon. Similar situation. Monthly price growth is now collapsed to 0.8%, which is the lowest it's been since August 2020. So we have the lowest monthly price growth in Portland that we've seen in over a year, whereas the year over year is still 19%. Now we're getting some requests for Las Vegas. So let's continue on the West Coast. Go to Vegas. Hit as many markets as we can in this video. Vegas peaked back in June. Once again, June and July, many of these markets peaked and has now slowed since then. Now, monthly prices in Vegas in October are still up 2%, which is pretty wild. 2% still crazy, crazy growth, but we are decelerating in a place like Vegas. I just got a request come through from Memphis, Tennessee. Let's do Memphis. Interesting. Memphis peaked in September. Of June of 2021. We fell down, but then we kind of went back up in October. So Memphis was a market that was moderating, but then turned back up. Turned back up in Memphis. And Memphis, along with, like I said, a lot of other Southeast markets, particularly if you're buying in a Southeast market right now that's poor, right, that has low median income levels, that has low earnings levels, potentially would have a lot of people who could be at risk of eviction and foreclosure as these moratoriums push through. The foreclosure moratorium really doesn't end until the end of 2021 and then really starts in 2022 when we're going to see more foreclosures. I think a market like Memphis could be at risk when something like that occurs, likely has many more people in default at risk of foreclosure. Don't forget about that foreclosure moratorium. People said that it was over a month or two ago, but due to regulations put in by the Biden administration, it's not really until early 2022. We're going to see many of those foreclosures come through the system. I think a market like Memphis, Tennessee, or Jackson, Mississippi, or New Orleans will have a lot of that filter through the system. So even though a market like Memphis is maybe more stable than some of the other markets we viewed in this video, I would still have some nerves buying in there right now. And if we just head back to the map here, month over month, let's just take a look at a couple more markets, month over month, that are in deep red. So we're seeing, interestingly, Pocatello, Idaho. I hope I pronounced that correctly. I know I mispronounce a lot of areas in the mountain regions of this country. We're still seeing 3.5% year-over-year growth in eastern Idaho, heading up to Kalispell, Montana, 3.3% growth. So we still actually have a lot of feverish activity kind of on this Idaho-Montana border. But the closer we go to Boise, the closer we go to Portland, inland kind of Oregon, we're seeing a slowing. And check out this slowing that we're seeing in the Bay Area. I actually want to zoom in around this. Zoom in on this for you folks. Santa Rosa, flat month over month. San Francisco, plus 0.3%. Napa, plus 1%. San Jose, plus 0.6%. Santa Cruz, plus 0.6%. We are definitely seeing a slowing in Northern California, in the Bay Area in general. In general, we're seeing Bay Area slowing, which is also spreading to some of these kind of more internal markets like Stockton, Sacramento, Redding, Chico, California. We're seeing a big slowing, as well as, again, in Southern California, LA, San Diego, Oxnard. And as I've said many times, this crash is starting on the West Coast. You can see it clearly in the data. When we look at that month over month price growth on the map, when we look at the graphs with that yellow line coming down, this crash is starting on the West Coast. That's where home prices are the most expensive relative to wages. That's where home prices are in the biggest bubble. States like California, Oregon, Idaho, Nevada, Utah. If we take a look at Utah, we can see Provo is starting to slow. So again, western half of the U.S. is going to start to see real price declines. I think in early 2021, we're going to see many of these month-over-month levels go negative, whereas the southeast of the U.S. is still going to continue growing probably through the middle of 2022. So it's important to understand those geographic differences. Now, let's get a couple more requests in here. What do we got? What do we got? Let's just take a look at, actually, let's take a look at Honolulu, everyone. I don't go outside of the continental U.S. enough. Honolulu, I'm sorry, which one is Honolulu? Here we go, plus 1.5% month over month in Honolulu, and some of these other islands in Hawaii are actually seeing really strong growth. So Hawaii month over month is still kind of in a big bubble. I'm nervous about Hawaii due to the huge job losses, absolutely massive job losses that Hawaii has experienced over the last 18 months. Like Honolulu, I think is down 14% on its jobs. Sorry guys. All right, so I forgot to put the map up. I apologize. So we're talking about Honolulu here, Hawaii. We can see huge price growth month over month. What I was talking about a second ago, which we missed, was that we have a lot of California slowing, the Bay Area slowing, Southern California slowing. So, this housing crash is starting on the West Coast. Now, let's get a couple more requests. I have time for a couple more, and then we're going to have to get going today. Someone just asked, what software am I using? It would be Tableau. Tableau. Albany, New York. We got a request for Albany, New York. That's actually where I was born. That's the metro area I'm from. So let's take a look at what Albany is up to in its housing market month over month, year over year. Interestingly, we can see Albany has kind of entered this stage of relative stability where we were basically around 1% price growth every month over the last year. And now we've seen kind of another downturn in prices in October. I know people personally in Albany. Some people are having problems selling their homes in certain parts of Albany, so I wouldn't be surprised if this price decline continues in Albany, New York. Let's take a look at another, let's just say like Rust Belty town. How about Cleveland, Ohio? Cleveland, Ohio, we're seeing a big decline, similar to Milwaukee, similar to some other parts of the Midwest like Minneapolis. We're seeing huge deceleration in price growth in Cleveland. Again, we're at 17% year over year, but now we're down to 0.6% month over month. So I think maybe negative prices in the next couple months in Cleveland. Let's just see what else we got. All right, I'm going to take three more requests. Three more requests, everyone. A couple of you were requesting markets I already covered, like Atlanta and Nashville. Go back in the video to see those. Orlando, Florida. Let's take a look at Orlando. Orlando, like many parts of Florida and the Southeast, is still going gangbusters. We probably reached peak price growth in July, 2.6% month over month, but now we're down to 2.1% through October. We're going to continue to see year over year go up in Orlando. We're at 20% year over year now. That's going to go up, but as this month over month continues to moderate, that means the market's cooling. However, it is still nuts right now in Orlando. All right, let's take a look at two more. We got two more requests. Sacramento, California. All right, as I kind of talked about a second ago with the Bay Area, we're seeing a Bay Area slowdown. And thus that means a slowdown with other housing markets that are kind of attached to the Bay Area. Sacramento prices are down, the price growth is down to 0.7% month over month in Sacramento. It's kind of fallen off the table. That's the lowest it's been in over a year. So big slowing in price growth in Sacramento, even though we are at still 24% year over year. And now I will do one more. We're going to do Dallas, Texas, the city that I now live in. Dallas. Dallas, again, is a market that's kind of in between. Annual price growth is up to 23%. The typical home price is now $332,000 as opposed to $270,000. But month over month growth is slowing, still at a very high rate of 2% month over month in October, but we have now passed peak craziness in the Dallas housing market. I expect this to continue to go down, and I think many parts of Texas are at risk of a big housing crash in early 2022. All right, everyone, I hope you enjoyed this video. Here's the theme of it. Take a look at that monthly change in home prices, because that's going to give you an indication of how the momentum in the market's changing. When that monthly home price growth, that yellow line, drops down, that's a sign that the housing market is slowing significantly, and that drop down could turn into negatives. Prices in the negatives, prices going down very, very shortly in markets like Milwaukee, Boise, Los Angeles, San Francisco, Cleveland, Minneapolis. Markets that that yellow line was crashing down could be seeing price drops very, very soon. Meanwhile, Orlando, Nashville, Atlanta, Miami, where we're still at 2% month-over-month price growth, we have some time. There's time in those markets before the crash occurs. How much time? I don't know exactly, but maybe 6 months, 3 to 6 months before we start seeing prices really decelerate there. So useful for you to understand. Understand your position as a home buyer, real estate investor, seller. What's your timeline? You need to ask those questions to yourself, understand the answers to them, and then look at this data to help make a better decision in the market that you're in. And then also, one thing I wanted to tease, tomorrow on Saturday, I'm going to have a video coming out. I don't normally have videos coming out on Saturday, but I'm going to have one tomorrow on my most recent bet against the U.S. housing market. I made a new bet against the U.S. housing market. I shorted a particular real estate company, and I'm now up 100% on that investment over the last month. I've doubled my money. I'm going to show you what that bet was tomorrow and explain why it's indicative of what's going on and what's going to happen in the U.S. housing crash. So make sure to tune in tomorrow on Saturday as well. All right, everyone. Until next time, this is Nick from ReVenture Consulting. If you appreciated this content, just make sure to smash that like button into oblivion.